Hello everyone, welcome to our YouTube channel Making Investments Simple. And today I would like to talk about HRA, house rent allowances, and when you can claim and how it is calculated. So there is an interesting article from Money Control from which I thought of making this video and also going through the article for your reference. So if you are living in a rented house, you can exempt your rent payment from the taxable income while paying your taxes at the end of the financial year. So many of you already know this, but the rent you pay every year can be adjusted to your salary to reduce your tax burden. And how it is calculated is a big question mark for many salaried employees. So make sure that you are receiving house rent allowance HRA from your employer, and also you should provide the rent payment details to your employer as per the as per the tax rules. So HRA provides tax benefits for rent salaried employees pay for accommodations every year under Section 10 13A of Income Tax Act 1961 in accordance with Rule 2A of Income Tax Rules. So under this, a part of the salary, depending on the place of residence, your basic salary and your actual rent is considered as house rent and is exempted from tax. So when you can claim, simply when you're living in a rented house and paying rent every month to your landlord or landlady, you can get tax exemptions for the amount. However, you also need to know that there are certain rules to calculate your tax exempt HRA. So this tax benefit is apart from your home loan, and the two have no direct bearing on each other. So please do remember that. As long as you are paying rent for an accommodation, you can claim tax benefits on the HRA component of your salary while also availing tax benefits on your home loan. So for instance, if your home is rented out or you work from another city, you can still claim HRA. At the same time, you can claim tax benefits under Section 80C of the Income Tax Act for the principal repayment up to 1.5 lakhs, and under Section 24 on interest repayment up to 2 lakhs. So if your salary is structured correctly, you can stand to lower your tax burden substantially. So however, if you miss your if you just remember that you have to declare this with your employer every year, and some employers do this at the beginning of the year for as a tax declaration. However, if you miss your employer's deadline and do not submit your rent receipts, you do not have to worry about it. You can submit this while filing your IT returns at the end of the year. So claiming HRA while ITR is very much possible, and also you don't have to pay the rent receipts at that time. However, please do keep a record of all the rent receipts so that you can submit them when you require to do so from the IT department. I'm sorry. So so that's about it. So how is this HRA calculated? Now HRA exemption of the allowance is also provided to the extent of actual HRA received or rent paid in excess of 10% of the salary. 50% of the salary if the residence is in Mumbai, Calcutta, Kolkata, Delhi, or Chennai, or 40% of salary if the residence is any of the other cities. So we can understand that HRA computation better with the following example. So if Mr. A is employed in Delhi, has taken up an accommodation on rent which he pays monthly rent of 15,000 rupees during the financial year, and he receives a basic salary of 25,000 rupees per month, and daily allowance DA forming part of the salary of 2,000 rupees per month during the year. He also receives an HRA of 100,000 from his employer during the year. So to understand the composition of HRA that would be exempt from taxation during the financial year is as per in the table below. As you can see, actual HRA received 1 lakh, rent paid 15,000 per month into 12 months 1,80,000, and 10% of would be 12,400, 32,400. That is 10% of, there is a calculation out here. So HRA is an, yeah, so this is, to summarize, HRA is an allowance given by the employer to an employee in order to meet expenses in connection with rent payments towards accommodation taken by the employee in the city of employment. You should be living in a rented house. You should have furnished an agreement. You're paying rent to your landlord, landlady. However, he or she should not be your spouse. You can have an agreement with your parents or children. However, they need to furnish rent receipt as part of their rental income and should acknowledge it under their taxable income. You should keep your rent receipts and PAN of your landlord readily available only in the case when rent exceeds 1 lakh in a particular financial year. So these are the information available for rent receipts, which is very, very important for your taxation and saving taxes. Hope you enjoyed this video, and if you have any questions or comments, I'll be happy to answer them. Thank you, and I will see you again on my next video.